Interest rates in the U.S. could be set to rise. Rates in Canada, meanwhile, remain at multi-year lows. Our next guest says Canadians should not be tempted to lock into fixed-rate mortgages. Joining us now is Samantha Brookes. She's Chief Executive Officer and founder of Mortgages of Canada. Thank you very much for coming by. Why should home buyers or potential home buyers not be drawn into the low rates and attracted to the idea of locking in now?
Because what we have is, right now we are very low with our rates, and the variable rate is actually the best way to go. When we look at the variable rate, it actually gives you flexibility, and that flexibility is an option for clients should something happen, life happens, that they're able to break their mortgage with only a 3-month interest penalty. So if you lock into a fixed rate, there's a larger penalty if life does happen, and that's something that you want to steer away from.
Okay, John.
Yeah, I'm kind of curious as to when people are taking out mortgages these days and buying houses, are they actually putting in place a financial plan, and are they making their house purchase as part of a kind of a comprehensive financial plan?
Well, a lot of people do not have a financial plan, and they really need to sit down with a professional to make sure that they are able to afford their mortgage. What we do see is that a lot of people buy more than what they can afford by not being pre-approved before going out and purchasing their home. And so that causes a problem later on if they start falling behind in their mortgage payments.
Yeah.
Go ahead, John.
So you find you think the pre-approval process is very important? It's
extremely important, actually, and I think that the government needs to do something about it to change the way they allow the real estate agents taking consumers out, because if they do not have that pre-approval, they don't know how much they can afford, and that puts them at risk, right?
Your company deals with a certain number of subprime clients as well. You told us in the break that a lot of your clients are self-employed, and so it's much more difficult for them to get approved at a major mortgage lender. What kind of patterns are you seeing in that market right now, the subprime market?
So what we're seeing right now, that the rates are actually fairly low for subprime market, and it's not that difficult as long as you have a good down payment. With subprime, usually it's about 20% is what the lender would like to see, but there are private lenders that will go up to 85% that can cover the extra 5% if needed.
Okay. Now, subprime and no financial plans. There's some of us who are worried about the state of consumer finances from an aggregate level. Are there things there that you see kind of on the ground and being part of the market that will worry you over time about potential stresses that we could be facing if there's an employment shock, or maybe if interest rates go up a little?
Absolutely. My concern is that the consumer is not being very careful with their credit, and they are spending a lot. Like right now, I am seeing a lot of people refinancing, but they're not able to manage the debt level, and so they're at the risk of losing their home, and your home is the biggest investment. And so when you have something so large that you could potentially use for part of your retirement, you want to make sure that you have a plan and that the money is being secured.
Samantha, thank you very much for joining us. We're glad you had the chance to speak to you today. That's Samantha Brookes. She's founder and Chief Executive Officer of Mortgages of Canada.